Investing is not just about buying any stock. It's about finding the right stock at the right price and taking the trade at the right time. And often this can be a difficult task to get it right. So today I've done the homework and I've come up with 5 stocks under $10 that has huge upside potential and the company has strong fundamentals. So what I'll do is that I'll first talk about the stocks and then we'll take a look at the charts to see where we can get in so we can make the most out of our investment. Hi, Money Talkers. Welcome to Ben Talks Money. My name is Ben. I have an MBA in finance and management and I have 8 years experience in trading. So let's get started. So the first stock on the list is Compass Inc. The ticker symbol is COMP and it's right now trading around $8.80. It's a real estate brokerage platform. They have a double-digit revenue and a lot of analysts has forecast these stocks to move up about 22% within the year, and they have a huge surge in revenue for the past year, the past 12 months, about 92% jump in revenue, and there is a huge buy rating on this stock by a lot of investors and analysts. So the first stock on the list is Compass Inc. The second one is Hecla Mining Company. The ticker symbol is HL. This stock is trading around $7.80 and it's a mining company, gold mining company, and the price, this stock has made revenue in about 30% increment. Analysts estimate about 24% upside. And one thing I like about this stock is that it's a low way of hedging your portfolio. If you have a lot of stocks, usually gold is one of the assets that has a negative beta. So a negative beta means that that particular asset or that particular stock moves opposite the direction of the rest of the market. And gold has a negative beta whenever most of the time when gold is going up, the market is coming down. And when there is something happens in the market and the market is dropping, then you see gold going up. So it's a good way to hedge your portfolio with this kind of stock because most of the gold ETFs, if you look at GLD is around $300 right now, and if you compare that to this stock trading around $7.80, it's a good way to hedge your portfolio. So that's why I put it on the market. They have a strong fundamental and the price is reasonable with about 30% upside, forecasted by most analysts. So, and the third on the list is Inter & Co. Inter & Co. The ticker symbol is INTR, and this stock is also trading around $8.20. It's already profitable company. It's based in Brazil. It's a digital banking platform, and they have a robust fundamental. In the Q1 income grew about 30% year on year. So that's a strong fundamental there. You can see growth in there, and the gross revenue also went up by 38%. So that's a company with a solid fundamental, and a lot of the fintech stocks, they are doing really, really well right now. If you look at SoFi, if you look at Robinhood, the sector is doing well right now, and INTR has a strong fundamental and is something to take a look at. The fourth one on the list is IH Holding. IH Holding. So IH Holding, the ticker symbol is IHS, and it's currently trading around $3.50 right now. So this company is a global tower operator. They have infrastructure across a lot of the emerging markets, and their AI-based model, they use AI-based model to peg fair value. So this stock, is currently at $3.50. It has the potential to go about 30 to 35% upside in the next coming months. And the company has a strong fundamental, a healthy ROIC of about 10%. So this is a company that is on the radar at this current price of $3.50. It's something to take a look at. And the last but not the least, actually the last and my favorite is Indie Semiconductor, and the ticker symbol is INDI. If we look at the semiconductor sector, you look at your AMDs, your NVIDIAs, your Broadcoms, that sector is doing really well. And INDI is currently trading around $3.40. Is what they do is that they are mainly focused on chips for electric cars and driverless cars. That's where they are moving towards. So most of their semiconductor chips that they make are for electric vehicles. And this company has a strong fundamental. They reported about 29% increase in revenue year over year. They are expected to be profitable by the last part of this year. And it's a lot of analysts give it a strong buy rating, with an average suggesting price of about 78% increase. So if you buy the stock at $4.40 and you're getting 78% increase, I think that's something worth the risk, right? So now let's look at the chart and see how we will play these stocks. So the chart that we take a look at is COMP. So this stock, if you look at it, the base back in 2021, if you look at the daily chart, it's formed a nice U shape, and this is usually how I like to enter a trade. For a stock, you can see it came all the way down from $20. You can see that from here, $22, around $22, and it's currently trading at $7 and trading around $8.70 right now. So if you look at the chart, it formed a nice U shape down here, right? You can see it formed a nice U shape down here, and that's usually the best place to get in, from the bottom here. But since it's already made a move, what I would do in this instance is just wait for a little bit of a pullback. Just wait for a little bit of a pullback. Hopefully, you get a pullback into the 50, the 200 day moving average. If you get a pullback into the 200 EMA, that would be the best way to get in, which is around $7.30. But if not, you look at a pullback into this support zone of around $8. If it can pull and hold $8, that would be a nice way to get in. The next one that we will take a look at is IHS. So if you look at IHS, let's look at the daily chart. The daily chart of IHS also looks similar to that of COMP. But the thing is that this one is nearing the 50-day moving average, right, on the daily chart. So in this case, it will be best for you to just give it a little bit time. You can see it pulled back a little bit in the last couple of days. So just give it a little bit time and see if it's going to test the 50-day moving average. That would be the best way to get in. The 50 days around $6, which is actually a really solid way to get in. So I will wait to see if we can retest the 50-day before I start building a position. And the next one, let's look at INDI. So INDI is also pulling back a little bit. This stock has really pulled back all the way from almost $16, and it's now holding around $3.80. It's actually trading around $4.25. So if you look at it, the 50 days is around $3.87. So this one is perfect. Just wait to also test the 50-day before you get in. That's the best, because usually stocks tend to hold this kind of moving averages. So the 50-day is right here, and then the 200 days also around $3.40. Now let's look at INTR. So INTR has been actually moving a little bit. the stock has gone up a little bit right here. So in this instance, it's also good to just wait for a reasonable pullback, right? It's always a good idea to wait for a pullback in this instance, because you don't want to be buying too high. You want to let it test some form of a support before you get in. So in this instance, there's a support here around $7.80. So you wait. That's where it's testing right now. You can see it's currently testing that support, but give it a few days and let it test the 50-day. The 50-day is around $7.20. I always like to, when I'm opening a position like this, especially if it's going to be a position that you're going to hold it for a couple of months or something like that, it's best practice to just let it test a support level. And right now, the best support coming in right now is the 50-day, which is around $7.20. Now let's look at HL. HL seems like it's on no man's land. It's right now at $7.48. $7.48 right now, and I think it gapped up a little bit in the past couple of trading sessions. So usually, just wait if you see this daily volume here. I mean, the market is down today, but you will want to just let it settle down a little bit, right? Give it a few days, let it settle down and see if there's forming a support or something, or if it's testing one of the EMAs, the 50-day or the 200-day, before you decide to jump in. So usually, in terms of positions, what I usually do is that I do dollar cost averaging. If I want to put $1,000 in it, what I'll do is that I'll divide it into 4, and put 250 in there, and wait a couple of weeks, look at the chart, what's going on with the chart, and if it's coming to a support level or something like that, then I add another 250, and then you give it like that, or if you want to make it a weekly or a monthly payment, a monthly purchase, that's something that I think you can also do, just to make sure that, because you can't always time the market, right? You can't always time the stock market, so it's usually best to just do the dollar cost average. Okay, so that's all for now. 5 stocks that has huge potential, and the company is having huge, great fundamentals, and these stocks are all under $10. And if you have any question, leave it in the comment section. Don't forget to subscribe to the channel, like and share, and until next time, let's keep talking money.